This month, Bitcoin has reached a new all-time high, rising to almost $42,000. Bitcoin reached its peak on January 8th, and it is currently experiencing a correction after a massive bull run. But let's take a step back, look at the bigger picture, and see how this bull run is different from the one in 2017. Bitcoin was invented in 2008 in the midst of the global financial crisis and released to the public in 2009. The initial price was less than a cent, and 10 years ago it was still worth less than a cent. 5 years later, in 2015, the price was already at around $300, and it was exponentially growing since then, bringing us to the first massive bull run of 2017, when everyone started to talk about Bitcoin and wanted to jump into the bandwagon. The value was close to $20,000, and for the entirety of the next year, we have seen a draining correction. The recent bull run was even more unprecedented and attracted even more attention to the crypto space. Perhaps the reason why the first bull run of 2017 took so long is because it had so much heavy lifting to do. Very few people had understanding of blockchain and crypto, the technology was still very new, and use cases were limited. Especially at the beginning, people were reluctant to invest based on what it might be able to do in the future. 3 years on, the cryptocurrency is already being used in a daily life. From gaming to payments, it has now a wealth of use cases and more being created all the time. The coronavirus crisis left government short on money and faced with some monumental expensive problems. To pay for the millions of newly unemployed citizens and businesses that need bailing out, government need money. But hold on, there is none left. And it seems like with fiat, there's only one solution: print more money. The scale at which new currency have been created last year is truly staggering. Nearly a fifth of all dollars in existence were created in 2020. As a result, central banks' balance sheets have risen by more than 20% of their GDP since the crisis began, mostly to buy government debt. Purchasing power of currency declined, and the current situation is a recipe for inflation. Here's where Bitcoin can break the cycle. There is a fixed supply of 21 million, meaning that Bitcoin is not subject to inflation, giving it yet another advantage over the dollar long term. Previously, institutional investors approached cryptocurrency with caution, if not outright skepticism, which was understandable. Now there are many well-known institutional investors, banks, funds, and insurance companies that are accumulating Bitcoin, and some of them are very vocal about its potential. With KYC and anti-money laundering measures now more widespread, regulation serves to hold registered traders to account, making the cryptocurrency industry safer for everybody. The first bull run fueled a mania over short-term speculation where investors scrambled to get hold of Bitcoin for the first time, only to cash back out into fiat. We don't think this is gonna be the case this time around, at least not to the same extent, because we know what Bitcoin is capable of, and $42,000 may not be the highest it will ever grow. In fact, the stock-to-flow model suggests a drastic increase of price within the 2-year time frame. If it is proven correct, the next psychological barrier Bitcoin needs to break through isn't $30,000, but $100,000. And if before it seemed ridiculous, now we should think twice about it. So what is your take on this bull run? Would you agree with the points we mentioned in this video? Leave us a comment below, and if you found it interesting and informative, please leave a like and share this video. Thank you so much for watching. Have a great week.